Warren Buffett is one of the smartest and richest investors in the world who has made billions of dollars. How has he managed to be so successful, even during tough times? Inflation is soaring, and our money is losing value every single day. So if you're interested in learning more about how to grow your money during these tough times, then stick around, because this video is for you. Some of the advice might shock you. These are Warren Buffett's 5 best investment rules for inflationary times. Advice number 1. Look for businesses with strong competitive advantages and pricing power. When it comes to investing during periods of inflation, Warren Buffett says look for businesses with strong competitive advantages and pricing power. In other words, you want to find companies that will be able to maintain their profitability even as the cost of goods and services goes up. Buffett cites 2 examples of businesses with this kind of pricing power: Coca-Cola and See's Candies. He points out that even when the price of sugar doubled, people were still willing to pay the same price for a Coke or a box of chocolate from See's. So, how can you find companies with this kind of pricing power? Look for businesses with dominant market share in their industries, high barriers to entry, and strong brands. These are the types of businesses that will be able to weather an inflationary storm and come out ahead. If you're serious about making big money, combining this with advice number 2 will do you wonders. Advice number 2. Invest in businesses with the lowest capital needs. Inflation can be a tough thing to predict, but one way to safeguard your investments is to choose businesses with low capital needs. That's according to Warren Buffett, who spoke at Berkshire Hathaway's annual shareholders meeting in Omaha, Nebraska earlier this year. Businesses that will perform the best are the ones that require very less capital to facilitate inflationary growth, Buffett said. Buffett pointed to 2 of Berkshire's recent acquisitions, insurance companies Geico and General Ray, as examples. Both businesses require very little in the way of capital expenditures, which means they're well positioned to weather an inflationary environment. Advice number 3. Don't invest in gold. Many people think of gold as a safe investment, but Warren Buffett says otherwise. In his opinion, gold is a bad choice during inflationary periods. The reason for this is that gold doesn't produce anything. An individual owning 5 ounces of gold will have the same amount after 5 years without an increase, explains Buffett. Gold doesn't earn interest or dividends, and it doesn't grow or reproduce. In other words, it's just a piece of metal that sits there. That's not to say that gold can't be a good investment at times, but during periods of inflation, Buffett thinks that there are better choices. He recommends investing in companies that produce things and have the ability to increase the prices when inflation rises. These companies will usually perform better than gold during inflationary periods. So, if you're worried about inflation, you might want to take Buffett's advice and avoid investing in gold. What else should you avoid touching as an investment during high inflation? Listen to Buffett's next advice. Advice number 4. Stay away from bonds. When it comes to investment during inflation, Warren Buffett is often considered one of the smartest guys in the room. So when he says something, people tend to listen. Recently, Buffett said that bonds generally aren't going to do well in times of inflationary periods. And while some experts have disagreed with him, there's no denying that bonds can be a risky investment during the times of inflation. Here's why. When inflation rises, bond prices usually fall. That's because the fixed interest payments on bonds don't keep up with the rising cost of living. As a result, investors who hold bonds can see the value of their investment decline. In contrast, stocks tend to do well during periods of inflation. That's because companies can raise prices to keep up with the rising cost of living, which means their profits go up. So if you're worried about inflation, you might want to consider investing in stocks instead of bonds. Advice number 5. Invest in yourselves. Warren Buffett, one of the most successful investors in history, has some sage advice for those looking to build their wealth during inflation. Invest in yourselves. In order to maintain your value over time, you have to create and polish skills, said Buffett. In a recent interview, Buffett also emphasized the importance of education and lifelong learning. He went on to say that too many people focus on making money, instead of investing in their own education and development. By taking the time to learn new skills and staying up to date on current trends, you can position yourself for long-term success. So, if you're serious about building your wealth, remember investing in yourselves first and foremost. It's a lesson that Warren Buffett has clearly taken to heart. If you're worried about inflation, there are a few things you can do to protect your investments. Warren Buffett recommends investing in companies with pricing power, low capital needs, and strong brands. He also suggests staying away from bonds and gold. So, if you're looking for ways to safeguard your portfolio against inflation, these are a few tips to keep in mind. If you like this video, then hit the like button and subscribe to the channel for similar informative videos. Also, if you'd like to be notified when a new video is posted, click the bell icon. Thanks for watching.